Yeah, look, absolutely. We majority of our revenues to date have been through Bitcoin mining, but Iron was founded with my brother Will in 2018, and fundamentally we set it up to solve the challenge around powering the digital world, which grows at an exponential rate. You've got all these exponential demand drivers, whether it's Bitcoin, whether it's AI, whether it's some future technology tomorrow. So our vision was to build a power-dense next generation data center platform to monetize it. So today we're operating Bitcoin mining machines right next to latest generation NVIDIA chips training AI models.
The TSA is expecting to screen a record 17 million airline passengers this Labor Day weekend, with today being the busiest day. One key, perhaps, to managing the strain, artificial intelligence. For her latest installment of AI Impact, our Julia Borston is looking at AI in the sky.
The airline industry is betting that AI can help it reach new heights. Major U.S. airlines, including American, United, and Alaska Airlines, are investing in new AI tools to help speed up and streamline everything from ground control to customer service to route optimization. American Airlines took us inside its Dallas-Fort Worth control center to show us its AI-powered smart gating tool in action. The technology, developed in-house, uses AI and machine learning to automatically assign gates to incoming flights, cutting down on runway taxi time.
The sooner the plane gets to the gate, our passengers have more time to connect, our bags have more time to connect, our flight crews have more time to connect.
American says this tool has cut aircraft's taxiing time by about 20%, or 2 minutes per flight, which adds up to about 17 hours daily across the 5 airports where it has been rolled out.
60% of the customer traffic is making connections. This is a really big deal. So trying to do that manually used to take us hours. Now with smart gating, we reduce all that to less than a few minutes.
A huge boost to workers in China, but times may be changing.
In the Chinese factory hub of Zhengzhou, known as iPhone City, people are gearing up for the launch of the iPhone 16. Apple supplier Foxconn has ramped up hiring.
Recruiters pass out starter kits for the new hires with all the daily essentials, and that includes a blanket.
But recruitment agent Ma Shuai says there aren't as many jobs as there used to be. Foxconn hit its peak, he says. Ma recalls when the factory employed 400,000. In 2018, the province shipped 126 million smartphones. Today, less than half that.
The iPhone 16 is generating a lot of interest from potential workers here at Foxconn. But with that is trepidation about just how long these jobs can last.
Foreign investors are souring on China and face pressure to redraw supply chains amid heated geopolitical tensions. There are numerous reports Foxconn is also producing the iPhone 16 in India, the first time Apple's premier phone would be made there. Foxconn would not confirm that to CNBC. The government-run media report all is fine, arguing the next China isn't India, but will still be China. Yet in Zhengzhou, people remain worried. The street food seller caters to Foxconn workers. There are far fewer customers, she says. Compared to 4 or 5 years ago, my revenue is down 50%. We would have to send our best workers to those countries to train them and teach our craftsmanship to foreigners, says this Foxconn job applicant. I don't like the sound of that.
So I think you're about to understate this thesis. In your mind, if tech continues to decline, you think that stops the rotation? That's a little bit confusing. So kind of spell that out for me. If we continue to see pressure on tech, you think that stops the rotation into these other sectors? I don't quite understand that.
Okay, this is my thinking on this. First of all, again, this rotation that we've seen in the last couple of weeks has taken place as the tech group has underperformed. You mentioned on the Nasdaq, right. It's retraced about 2/3 of its decline, where the S&P has retraced 100% of it. The thing is that all the, especially the big cap tech names, but the tech group in general, are so highly weighted in the big averages, the Nasdaq 100 and the S&P 500. 57% of the Nasdaq, over 30% of the S&P. If those start to roll over in a significant way, instead of just lagging to the upside, that's going to pull those indices down. If the major indices are going down, I'm sorry, but investors are going to start saying, do I really want to rotate into another sector, or do I want to rotate into cash, which still pays me 5%?
we need to build 3 million more houses to start to bring housing costs down. We have a plan to do that. We're going to need some bipartisan support. It's unfortunate that Senate Republicans blocked the tax credits that would have resulted in a down payment of 200,000 affordable homes. But look, every day, I think the president, the vice president are working to lower health care costs, lower housing costs, getting rid of junk fees and credit card fees. So no, everybody is focused on the work that is necessary to deliver for American middle-class families.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And make sure you go to TikTok, like, and follow. Videos are coming this weekend. Now we have Dan Roberts of Iron, and he talks about powering the digital world. Mining Bitcoin right next to NVIDIA chips, training AI models. And guys, we know this digital economy is about to rise. All this technology is ready. They just need that one crisis to bring it on in. All the issues that we see that are going on right now, that's all you hear about is the talk of how AI is going to fix the issue. Now we have the airlines. All the issues that they have, guess what? The fix is artificial intelligence, speeding everything up. And the same thing with these digital assets, speeding transactions up at lower cost. And remember, the Crypto Teacher told you. Now we have China's Foxconn on manufacturing the iPhone. Now the manufacturing is moving over to India. And of course, the people are upset because they want those jobs. How can we teach these skills to other foreigners? Guys, don't that sound familiar? Remember, America used to be the manufacturer. And then all these corporations moved over to China for cheap labor. And the same thing's going to happen in China because now those jobs are going to move over to India and Mexico. And remember, the Crypto Teacher told you. And we have big stock funds are getting out of stocks and moving to cash because guys will know they want to wait on the sidelines because they're going to get this legacy market for pennies on the dollar. And remember, the Crypto Teacher told you. Now we have the Fed says we need over 3 million more houses to be built to bring down housing prices. That makes no sense whatsoever. But we know affordable housing has an agenda, and that's to plummet these housing prices. Remember, guys, the majority of wealth that has been gained inside the United States comes from real estate. And they don't want you to own nothing, but they want you to be happy. This is going to be a renter's nation. And we have the Fed higher for longer, and we see the holes in this legacy economy. Also, we still have inflation here, but we know the Fed and these other central banks are going to start cutting rates. But we have the drums are beaten, cyber attacks, the Birdman, and others. Just like I stated, guys, they only need that one crisis in order to bring this fourth industrial revolution in. And right now, we're already in a recession. Right now, we're in a Great Depression. The only thing I have to do is look at the numbers. If you're part of the Patrons, I keep you up to date on these bankruptcies, layoffs. They just keep coming. And they're going to pick up in 2025. And remember, the Crypto Teacher told you. Because he knows, when it comes to the NWO, it's all planned out. You have a wonderful day.
Deirdre, I don't think there's much risk of moving too quickly. I think the Fed's been too slow to respond. I think the rates have been too high for too long. So I'd get going. I mean, they've hit their mandates. That would be full employment. We have a 4.3% unemployment rate, which has been edging higher and is on the soft side of full employment. And inflation, with today's inflation reading, that's within spitting distance of the target. And I would say, if you exclude the implicit cost of home ownership, the owner's equivalent rent, which I think you should when trying to judge inflation in terms of what it means for monetary policy, the inflation rate is already well below target. So, full employment, inflation at target, 5.5% funds rate is, which is where we are today, is just too high. They should be cutting rates.
Okay, so how quickly should they be cutting rates, Mark? I mean, are you expecting 25 basis points in September? Do you think that there's room for maybe a 50 basis point cut between now and the end of the year?
Well, I think they'll cut a quarter point in September and probably again in December, a quarter point and go quarter point each quarter going forward until we get back to what you might call the equilibrium rate, that rate at which policy is either supporting or restraining growth. I think they would reserve a 50 basis point cut, a half point cut to environments where there's something that feels like it's going off the rails. If you go back to the market turmoil of a couple of weeks ago, if that had continued, then that would be the fodder for a 50 basis point cut. Or if the job market really started to weaken, unemployment started to rise in a significant way, that would be the fodder. But
you're talking about earnings for the last quarter, which is in the rearview mirror. It's interesting to me that you're seeing the stock market go up, and yet earnings estimates for the rest of the year have actually started to come down over the course of the past couple of months. And there's been no change from the analysts for 2025. So this has been purely multiple expansion related. And you mentioned the consumer, and yeah, the consumer is really exceeding expectations. There's no doubt about it. But we have this wide divide right now that's really incredible, because real personal disposable income, after-tax income in real terms, is growing 1% over the past year, and your real consumer spending running almost 3% over the past year. So the fallout from that is we're seeing this relentless decline in the personal savings rate. This time last year, the savings rate was already pretty low at 4.5%. Today, it's 2.9%. It's only been this low in the past 5% of the time. It's a 1 in 20 event. So I look at the consumer, I know what you're saying, but it's really the consumer spending report, I would say, is a low quality report, because it's not being generated by real income growth. It's been generated by a continued drawdown of the savings rate to historically low levels. And when we talk about the recession, we've seen recession in real capital spending. The industrial sector is in recession, and the housing market has rolled back into recession. These aren't the biggest components of GDP. Of course, that's the consumer. But there are segments of the economy that are operating below the zero line. Admittedly, not the consumer ... Not yet. As for your comment on the unemployment rate, it's not stable at all. It's gone up 80 basis points in the past year, and that's what's caught the eye of Jay Powell. That's the only reason why they're cutting interest rates, is they're concerned now that there's too much slack being built up in the jobs market. So that's the story, is that you're not seeing job loss, but the unemployment rate is going up, and Powell's already told us that is the most important statistic for him right now.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important look, we have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.